Right, so this would be the Fibonacci series. It's a continuation of last week's series, right? So for today, I'll be covering a brief overview of what we've went through, and we'll take off from there. Okay, so just a quick introduction of myself, right? I'm Li Xing. So I provide FX advisory to institutional clients. You can also find me on LinkedIn. So if you guys have any questions for the sessions that are done on Wednesdays, Thursdays, and Fridays, right, you can feel free to reach out to me on LinkedIn, or if you're with us live right now, you can put them under the questions tab. So just a quick disclaimer before getting the session started. The information presented here is not to be treated as investment advice. It's for educational purposes only. So this is the agenda, right? So this is a continuation of last week's session. So just a brief summary of what we have covered in the previous week for those of you guys who missed the session, right? So for this whole month, we're covering mainly on Fibonacci extension. So better understanding how we can apply these extensions to find support and resistance zones in the market. So in short, Fibonacci extensions are basically zigzag patterns that we are looking out for, right? And we use these zigzag patterns to help us to identify or project potential levels that price might go. So in this case, right, using Fibonacci extension, there are 4 kinds of zigzag patterns that we want to keep a lookout for, which we will take a look at in deeper details in the next slide. Right, so just understand that for today, right, we will be covering mainly on using Fibonacci extensions to identify the key zones, and also how we can actually combine them with other technical indicators. So for technical indicators, right, there are 2 types. Main ones are the trend following indicators. So for example, your moving averages, Ichimoku cloud, right? So essentially we want to trade in the direction of the trend. The other type would be oscillators, right? So this would be more for ranging markets. So when market is testing a resistance or support level, right? In a ranging market essentially just means that prices are moving sideways. So in a trending market, right, trend following indicators are generally used when you can see clear market structure of lower lows and lower highs. Whereas in a ranging market, you don't see a clear market structure, right? Prices are generally moving sideways with support resistance levels being adhered to. So one thing about this is that in a ranging market, especially with clear support resistance levels, you can see that within these levels, there lies a lot of liquidity, right? So let's say in this area, right, we have this sell zone. So essentially when price comes into this area, what happens is that it entices sellers to enter the market with their stop losses lying slightly above these zones. So let's say if we sell at this resistance, right, usually the stop losses are lying just slightly above this area. So once we have a move down, right? If there's a strong move down, essentially, if you have big players coming into the market, right? If they want to sell with a big volume, they need the opposite direction. So essentially, they need buyers who are willing to buy at a certain price, right? So this would come in a form of pushing price higher to tap into this buy side liquidity. So imagine when you're in a ranging market, right? There are a few strategies here, right? So one would be breakout, essentially putting a buy stop above this area. So putting a buy stop above the resistance to play a further move up. Or we have a straddle, right? So essentially selling at this resistance areas and putting their stop losses, which are essentially buy orders above. So notice that when price comes into this ranging markets, there are a lot of liquidity lying slightly above, right? So above the resistance, you have buy orders lying slightly in the form of stop losses or buy stops. And the same applies to this support levels, right? So when price comes into this zone, it entices buyers to come in, right, to play the push up. And when they put a long position, stop losses are lying slightly below. So this stop losses would be basically sell orders. If we're buying, the stop losses are in the opposite direction, right? So they're sell orders, or they can be in sell stops. So for breakout traders, right, essentially when they're waiting for a strong drop below this area, they can have their sell stops triggered. So again, right below the support levels, you can see that there are a lot of sell side liquidity, right? So essentially a lot of orders lying here. So imagine if you are a big player coming into the market and you want to go in or tap into these areas of liquidity, right? If you want to buy, you need to ensure that there's someone else in the opposite, taking the opposite direction. So if you want to buy, you need to have sellers who are willing to sell to you at a certain price. So this is why, right, in a ranging market, you can see liquidity sweeps, right? So essentially price tapping in either side, right, before going in the intended direction. Okay, so for technical indicators for today, we'll focus mainly on the trend following indicators, right? And if time permits, right, we'll go into the ranging, the oscillators. Okay, so just a quick summary of what Fibonacci extension is. So for Fibonacci extensions, right, like what we've mentioned in the previous few sessions and previous examples, we're using it to identify support and resistance levels. At the same time, right, even though we are using it as a support and resistance level, I do want to highlight the importance of identifying these zones first, just looking at it graphically, instead of taking it at a specific level. So if you load the Fibonacci extension tool, right, so we'll hop onto TradingView for that later, but for Fibonacci extension tool, you can see that at almost every interval, right, you'll have a 61.8, 78.6, 100, so on and so forth. So there'll be multiple levels, right? So which is why, even though, right, we do use this extension tool, we try to identify or try to combine it with graphical levels. And it's even better if you can use them across multiple time frames, right? So starting from your higher time frame first. So essentially our daily or our weekly time frame and the monthly, right? So this it's what we do for our live analysis session, essentially using these time frames to help us determine the direction. So if prices are on a bullish market structure on the daily time frame, right, any pullback within the zone itself on the smaller time frame would present an opportunity for us to play this move up. Okay, so and then on the H1 and the H4, this is where we will be using it or trying to find entries. Okay, so you can use your Fibonacci extension on these 3 time frames just to identify the higher time frame zones, and then the smaller time frames would be the ones for entries. If you are playing intraday trading or if you are doing scalps, right, you can even go to levels as low as the M5. But of course, right, the lower the time frame, the noisier it gets, right? So if you load the M5 chart, you can see that it's a lot more choppy compared to, let's say, the H4. At the same time, right, support and resistance levels are more easily broken, right? You can see which source or these levels are not as respected compared to your higher time frame. Okay, and then we talk about Fibonacci sequence. So essentially for Fibonacci numbers, right, they're derived based on a mathematical pattern. Okay, so when you load the default levels on TradingView, you will be able to see the numbers, right? And we have also summarized Fibonacci, right, in terms of zigzag pattern. So the main thing that to take away from this is that Fibonacci levels or Fibonacci extensions, they are basically zigzag patterns, and these patterns, it's actually in line with market structure, right? So if you can combine these patterns and also market structures, trend lines, right, this would be useful in the analysis. So when we talk about zigzag patterns, right, so you might ask, what are the types of zigzag patterns, right? So these are the 4 kinds that we're looking at. This is mainly for support and this is for resistance. Okay, so just make sure to be clear of this. So this is for support levels, this is for resistance level. As with other examples that we've shown in the previous session, right, understand that for this support and resistance levels, we are not taking purely just based on this, right? We are also keeping a lookout for market structures on your higher time frame. So take a look at this example. So this is resistance, right? So essentially, if we identify this zigzag pattern here, right? So let's say you identify this zigzag pattern, right? And we are using these 3 points to help us to project these levels. In this zigzag pattern itself, you can see that right now, if we take a look at just market structure alone, you can see that prices are forming a new high, right? So this is the last high. We have a low that broke the high, and this is a resistance. So what this suggests is that if you're on just one time frame itself, doing this extension level, this itself is actually bullish market structure, right? So if prices are forming your higher lows and higher highs, it broke above the last high. This high itself, right, this level that's being projected, it has to come in line with a higher time frame zone. Or if you have the overall structure where before that, right, prices are actually forming a lower low and lower high. And this leg itself, this whole leg that we have here in red, this just forms the pullback of this entire structure. Okay, so if market is in a downtrend and you're seeing this pullback, and this pullback is giving you a zigzag pattern, then there is a higher probability of this setup, instead of having price just continue higher lows and higher highs and you trying to project this extension level for a reversal. The reason why this is slightly more risky is because if you're in an uptrend, right, prices or this highs itself, they're constantly being broken. They're potential targets for your longs. But playing shorts from this area, right, you need confirmation on your smaller time frame to suggest that the trend is shifting, right? Because any pullback itself, you can see that price would likely continue higher. So the assumption that we have in mind is that if prices are in a downtrend, right, it's likely to continue in a downtrend until there is a clear change in market structure that suggests otherwise, especially if you're on your higher time frame. So let's say if you're on the daily time frame and you're seeing bearish market structure, right, until there is a break of the last high, right, or a break of the H4, right, so prices starting to form higher lows and higher highs, then this suggests a change in structure. Okay, so we can actually take a look at this example on euro dollar, right? So if you take a look at euro dollar, just structure alone. So let me just bring up the chart. Right, and at the same time, if you guys have any questions, right, do put them under the chat. Oh, chat deactivated. Okay, Fada, can you try again? I've activated it for everyone, so this should work. But if it's still not working, then I guess you just have to put it in the Q&A. Right, but the webinar chat should be open for everyone. Okay, I just activated it. So can you try again and see if it works? Okay, let's take a look at the higher time frame. So this is the picture on euro dollar. So recall what we're talking about for market structure, right? So let's just take a look at this most recent move. So here, right, you can see that there is this huge downtrend before that turnaround on the daily, right? And if you take a look at just the highs and lows, right? So if you're not familiar with market structure, right, or you have a hard time trying to see this candles, right, identifying the significant highs and lows, another way to do it would be to switch it into close. So if you switch it into close prices here, you can see that just mark out, right? So maybe you can take a highlighter, just mark out the significant highest points and lowest points. So this is helpful, especially at the start, right? If you're trying to understand a bit more on structures. So I'll bring out the highlighter, right? And just mark out this point. So you can see that there are significant lower lows and lower highs, right? If you mark out this swing points. Okay, it's loading really slowly, right? But if you just take a look at it in close, you can see the highs and lows, right? So lower lows, lower highs. And this change in structure comes in here, right? So you can see that prices continue forming lower lows, lower highs. And this is the last low that's being formed, right? So if you take a look at significant points, and what happens after is that price came in and it broke above this high. So this is the first sign of bullish market structure, this area here. You can see that price broke above the high, right? So price came in, it broke above the high, pulled back over here, right? Before it continues much higher. So in this case, right, if you want to use our Fibonacci extension here, so we need to identify this extension level. So for example, this area, right? Let me just zoom in. Okay, so this zone itself, you can see that this, when you are in a downtrend, right, in a market structure, in a downtrend, we're trying to find resistance areas, right, because we're playing the continuation, the trend continuation pattern. So we're trying to find resistance areas to sell. So in this case, you can see that there are actually multiple zigzag patterns that you can take, right, along the way down. So let's say this area, right, you have one zigzag pattern, which is here. Okay. And then following which you also have another zigzag pattern, which is this one. Oops. Let me see if annotating it with zoom it's better. Yeah. There we go. Okay, so there is another zigzag pattern here. So once again, right, once you found this, you can again take the 3 points and then project the extension levels and see if it lines up. In this case, it lines up with a support term resistance area. You can see this zone. So, and then again here, right, so this itself, right, so let's just take the most recent one for just to see how to apply this concept. So this is the zigzag pattern. More importantly, market is in a downtrend with lower lows and lower highs, right? So in this case, what this suggests is that unless this high is broken, right, the downtrend is likely to continue. So in this area itself, you can see this zone, right? When price broke the low, this high suggests that it's a safe area to put our stop loss, because if price breaks above this area, there's a change in trend. We want to get out of the trade. So in this case, right, when you do a zigzag pattern here, you can see that this extension level, right, I would probably have highlighted this area, right? Of course, a lot of it is on hindsight now. You can see that price is pushed higher. But let's say if we are here, right, so if I were to play back and we're at this zone, right, so let's say if we're here, okay, seeing this pullback itself, I would have highlighted this zone as the resistance. So this would have been the resistance area here, because this is the previous support and resistance level. So you can see what happened, right? So price basically came into this zone. Even if I were to put it in close, you can see that this was the previous support and resistance area, right? This zone, price came in, it broke the low, and following which price pulled back up into this area. So we have this support and resistance level, price came in, right? It pushed just slightly higher before we see that reversal here. So this extension level, right, this zigzag pattern that we have, which is found here. So once you find the zigzag pattern, right, we'll use these 3 points to project the extension. Oops. Okay, so by doing that, right, let's see what it gives us. So 0.1, 0.2, and 0.3. Okay, so these are the levels, right? So again, the 78.6, 61.8, and the 100. So in this case itself, right, you can see that the 100% would line up with the zone here. Price pushed slightly higher, and I believe it reached the 1.272. Okay, so it just tested this 1.272 level. So I'll just remove the rest. Let's just keep it here. So the 1.272 level, which is, let's say in pink. So you can see that price came in, right, wick slightly above it before the downside. So if you are taking trades from your higher time frame, so let's say you have this area as your resistance zone, right, and price, you're taking shots from here, taking immediate entries from here. This extension levels can also be useful in helping you to identify your stop losses. So let's say if you have a resistance area here, right, so logically the next resistance would be this zone, right, so the stop loss, and the take profit would be the target, which is this low. So in this example, the trade would have been a profit, but wouldn't have hit the take profit target. So which is also why it's important to shift to break even, right? When price comes into maybe, let's say, half, close out half, and also shift your stop losses to break even. So in this case, right, if you have this trade being taken, right, due to market structure and extension levels, you can see that this zone itself, right, the risk to reward, it's about, I believe, 1 to 2, or maybe a bit less than that. So in this case, if you want to have a tighter stop loss, right, another way would be to put it at key extension levels. So let's say if 1.272 is here, you have a small high here, right, and if I switch it in close, you can see as well the significant move this high, right. Another way would be to put it above these areas, so these graphical zones. Okay, so yeah, so just something to note for extension levels, right? So you can use it not only for stop losses and not only for entries, but also for stop losses. But again, right, as I've always emphasized, even across different examples, right, take a look at market structure, look at where the overall direction is. If it's in a downtrend, you try and find resistance areas, right? And these resistance areas can be found using Fibonacci extension levels of zigzag patterns that look like either of these ones. Okay, so whereas for support level, right, so in this case, you can see that when price broke above this area, it broke above the last high, right, and even more so here, it broke above the last high that took out the low. You can see that price just continued much higher. So this is a sign of change in structure, right, and the price continued much higher here. Okay, so in an uptrend, right, if we are seeing any pullback, you're in an uptrend, right, this pullback would be useful to find supports. So let me just remove the rest, right? So once price breaks above this high, So once there's a break above this high, this suggests that on the daily time frame, it's now bullish. Why? Because this is the last high that we have here, and this high broke the previous low. So this high itself should not be violated, right, if prices were to continue in a downtrend. So following the break of this area, right, anywhere between this zone itself, right, this pullback, you can see that again, there's bullish market structure. So if you want to wait for more confirmation, you can see that when price broke above the high, right, any pullback itself would be areas to buy. So in this case, right, where would be the next support level? It would be this area, right, resistance turn support level, which is basically here. So again, right, taking a look at these zones, you can see how price interacted with these areas. Again, as a support, and then price coming in, hesitating above this before it broke and closed above this. So this for breakout traders, right? If you're waiting for a break and close before playing the pullback, then this would have been a good opportunity. Over here, right? And then again, this is the support level. We have another support level here. So this is the bigger time frames, the daily time frames picture, right? So when price comes into this zone, right? So if I've identified this as a daily support in this area here, right? When price comes into this area, you can go down to your smaller time frame. It can be, let's say, on your 4 hours, right? So let's just focus on this portion of the chart. Let's go down to the 4 hours and see what it gives us. Okay, so this area. Okay, so when notice this area, right? So recall we're on the daily time frame. Price broke above the daily zone, right? So this is the gray zone. Price broke and closed above the daily zone, which is the bullish confirmation. Now you're on the smaller time frame. You can see that on the smaller time frame, there is again, right, an even clearer resistance turn support area. You see on the 4 hours, I'll just mark it in blue. So this is the fractal nature of markets, right? Any reversal you see on your bigger time frame always comes from your smaller time frame. So in this case, you can see again, very clear resistance turn support level. I'm on a 4 hours right now, right? And following the break and close above this daily support, which is this gray zone, right, was the daily resistance, price broke and closed above it, and it became a daily support. So following that, right, you can see that when you're on a 4 hours time frame, there is a recent, right, resistance turn support level with very clear rejections of this level twice, and a break and close above, and a retest of this. Okay, so you have your graphical zone, right? So the first check is done. You have the graphical level. The next check is looking at levels here, right? So trying to find if there are any levels that line up with this zone. So you can see in terms of extension level, right? This is the zigzag pattern. Okay, so this makes sense because we're trying to find extension levels for support. And this is there are two kinds of zigzag patterns, right? There's one that looks like this, and there's the other one that looks like that. So when you're trying to find extension levels for support, and the reason why we're trying to find support is because it's in line with a higher time frames direction, right? So on daily, it's bullish and it's sitting on the support level, right? It was a previous resistance level. When you're down onto the H4, you can see that this area was a previous resistance and support level. And along with that, you have your Fibonacci extension, right? We're trying to find support level. So it's this zigzag pattern that we have here, right? And trying to see if it lines up with the zone. Okay, so in this case, right, this is the most recent zigzag pattern you can see, and you can again take this Fibonacci extension. So 0.1, 0.2, 0.3. So as I've said, right, at every interval, you will be able to see a level. So which is why it's important to identify the zone first, right, instead of just trying to take it off random levels. So in this example, right, your 61.8, actually 78.6 extension would have been a perfect snipe, but you can see this zone essentially, right, 78.6, 61.8, they're all lining up at this area. So this blue zone that we have. So if your entry is at the 61.8 extension, which is this area here, I'll just put this in a different color so that we can see it clearer, right? Let me put it in pink again and remove the rest of these levels that are not relevant. Okay, so let's say here. So you have your 61.8, right? So it would make sense to enter on this nearest level, right? Price could go lower. In this example, it actually went right to the 78.6. So this is about 50 pips lower, right? So in this case, yeah, so this is about 50 pips lower, right? So you can put your entry either at the 61.8 or 78.6, right? This is dependent on you. But for me, right, I will put it at the 61.8, especially if it's in line with the higher time frame. Put your stop losses, right? So if your entry it's at the 61.8, your stop losses can be at the next graphical level. So the next graphical level, if you want to keep a low stop loss, would be here, because this is the last low that broke structure. You can see on the H4, right, clear higher lows and higher highs. So again, right, uptrends is supposed to continue unless there's a break of this low, right? Then that suggests a change in structure. So until then itself, right, this area, right, you can put an entry here, stop loss below this low, or if you're playing a tighter stop, right, you can actually put 0.5% of your position, right, here, keeping a much tighter stop loss below the 100% or 78.6, and then another 0.5%, right? Let's say if you're risking 1% on the position, right, you can split it. So the other entry, the same entry, but with a wider stop loss. Okay, so there are a few ways that you can take this position, right? But the idea is using market structure and Fibonacci extension levels, right, and trying to help you to determine these entries. Okay, so again, right, throughout this example, right, what's important is that I understand the higher time frames direction, and following which, right, you can use your lower time frame, again, just graphical support resistance levels, and trying to understand the general direction, right? And once you have that, right, you can use your Fibonacci extension to help you. So in this case, right, apart from just looking at Fibonacci extension levels, right, there are other indicators, so trend following indicators, right, like moving averages. So for moving averages, right, let me just load this, right. So just to share a bit more on moving average, essentially this is a trend following indicator that tracks the average movement in prices. So let's say if you have a moving average that is maybe for 20 days, right? So 20 moving average, it just means that it takes the close of prices, right, for the past 20 days and gives you an average. Okay, so in this case, right, when you have a moving average, right, let me just load a moving average. Okay, so personally, I like to use the EMA more. So EMA is an exponential moving average, which basically gives more weight on the recent price, right? Whereas if you are on a moving average, it's a SMA, which is simple moving average, it's linear. So each period is equally weighted. Okay, so this is just personal preference, right? I don't think there is much difference in EMA, SMA. Just personally, I prefer to use the EMA because it gives more weight to most recent price, right? So let's just take a look at, again, this example, we'll just take a look at the moving average. So this is the SMA, right? So essentially, it's just if you have a MA of 9, right, it just takes the average of the past 9 periods. Okay, so the moving average is loaded here, right? So when you have this area, right? So for me, moving average itself, usually I alternate between 20s, 50s, right? So 20s EMA for me, I find that quite useful. So if you're using EMAs, right, you can actually use either 20, 50s, right? Either of this would work. Okay, so let me just cover this. Okay, so let's say you have an entry here, right? You identified the entry over here, right? Some of you guys might want to use trend following indicators. It can be Ichimoku cloud, it can be moving average, right? So either one depends on you, right? So in this case, when you're loading a moving average, right? So generally I would load a 20 EMA for start, and then from there I'll toggle in steps of 5. So 20, 25, 30, so on and so forth until 50, right? So usually that's for moving averages. And you can see in this case, right, when you're trying to find a moving average that is useful for your current time frames analysis, right? If you switch to different time frames, then you can see that it shows you a different picture. So one thing about moving average is that it is a trend following indicator, right? So what this means that you try and find areas, right? Take a look at the past movement. So the past price, right? So if I'm trying to see if this moving average actually supports the buyers, I want to ensure that the previous history, right, of this moving average is actually in line with what I have. So in this case, you can see that whenever price moves down, right, this moving average itself acts as a temporary support and resistance level. So how you can tell whether this moving average is suitable, right? It's just, you can just eyeball this and take a look at how prices, right, this resistance areas are interacting with the 20 days moving average. You can see that there are fake outs, right? So strong push down below the moving average before moving in the opposite direction. Probably a sweep of liquidity, right? So for people who are trading just based on moving averages. But in general, right, you can see that this moving average, at least for the past, in the past, right, acts as a dynamic support resistance level. You can see very clear area here, right? So price respecting this as a resistance, right? But not so much here, right? So this is not as clean. Okay, so let's try and change the period, right? So let's say we change it into 25 instead, to see if it gives us a better or smoother view. So as much as possible, you want to try and find averages that are in line. So 25 don't really make too big of a difference, right? Prices are just whipsawing. It's giving a lot of fake signals. or I mean false signals. Okay, so in this case, not so much as well, right? So this would be a bit better if you take a look at, so this is currently the 30 days moving average. So if I remove all the drawings, you can see that the 30 days moving average, right, is able to capture the bottom, the support and resistance levels more clearly. Okay, so price coming into test as a support, breaking above this, and then coming into the support level again, right? So if you have an entry that's being identified in this zone and you want an alternative, right? So if you want price to push higher here, right? Let's say if you want a bullish confirmation, right? And you don't want to use the lower time frame market structure because that will require more monitoring, right? On the lower time frame when price enters this zone, right? If you don't want that, you can also use moving average as a bullish confirmation indicator, right? So when price crosses above the moving average, then you enter a long position. Okay, so that's something you can use as well. So apart from moving average, there's also Ichimoku cloud indicator, right? So the way to interpret this is that if price holds above this Ichimoku cloud, right, it's a bullish signal. If it's below, it's a bearish signal. Okay, so either one of this would work, but as with any other, so there are many ways you can analyze the market, right? Different indicators can give different bias, but for me personally, right, I think market structure, it's still the most reliable, right? So if prices are in a higher low and higher high, right, you identify the smaller time frame structure, and once it comes into this zone, right, you can use other indicators for confirmation. If it's in an uptrend, you want price to cross above the moving average, right? If you're in a ranging market, right? If you're taking shorts in ranging markets, then you want, let's say, stochastics to exit the overbought region. Overbought region. Okay, so yeah, okay. So for that, you're using 2150 and 200. I see. So there will be a cross. I would think that it's a crossover, is it, of the three moving average. So if it's 21 is above 50 and 50 above 100, then 200 is bullish. Is that it? Okay, so there are many ways you can use a moving average, right? So for me, I'm using mainly EMA 20, right? So if I'm using, but of course, right, as with different time frames, right? Sometimes you might need to switch to a higher time frame to see like a smoother average. I mean, a smoother moving average, right? Instead of having price that whipsaw around. I see. Okay, thanks for that. Okay, so yeah, so that's all that we have for today. Right, so mainly in using our Fibonacci extension, I think more importantly, I think throughout all the sessions as well, right, I've covered many times on market structure, right, the emphasis on looking at market structures and trying to identify support resistance levels from there, right. It's the logic behind it is very simple, right, but it's able to help you identify, right. Of course, as with every setup, it's a probability game, right, so there are times that it'll hit your stop losses, but just understand, trying to identify your direction on your higher time frame, right? Looking at either you can start from either the weekly, the daily, right? And using your 1 hour, for example, as your entries. And from there, right, these tools, be it retracements or the extension levels, right, can help support the analysis. Okay, so if you guys have any other questions, right, do put your questions down in the chat. Right, if not, that's all that we have for today's session. Okay, yes, so these are all the other examples that we've covered in the previous session. So I won't be going through them in details, right? But essentially you can see that as with every example that we've covered, right, what's important here I would like to highlight is the break-in structure. So looking at a break-in structure. So if price broke above, right, it suggests a bullish market structure. So in this case, right, any pullback itself are opportunities to take a long. You can see in this example that with the break-in structure, it's also resistance turn support level, right? In terms of zigzag patterns, there are actually two kinds of zigzag patterns we have here, right? One would be the one that's being highlighted, and the other one is actually this area. So resistance, this zigzag pattern, right? And you try it. And what we can do after is trying to project if the extension levels that line up here. Okay, and then as with another example on resistance, it's the same thing. You can see it's in the downtrend. Bearish market structure, lower lows, lower highs, break-in structure, and any pullback itself, right, especially coming into a resistance area, can serve as areas to sell. Okay, so again, there are two types of zigzag pattern that we have. The first one is in blue and the other is in purple. Okay, so yeah, so I think that's all that we have for today, right? So just a brief summary of what we've covered, right? We've covered mainly on looking at market structures and how we can actually combine market structures with Fibonacci extensions, trying to find our higher time frames direction, and also combining them with trend following indicators, right? So mainly on moving averages, Ichimoku cloud. So for me, these trend following indicators are used more as confirmations, right? But they are not determining the direction. Okay. So yeah, with that, we've come to the end of the session, right? So if you guys want to sign up for the future sessions, right, just go to vantagemarkets.com/webinars. If you have any questions, do email support@vantagemarkets.com. If you want to have a recording of the previous sessions, right, you can go to vantage.com/webinars. They have a link to the YouTube page, so you should be able to see the previous sessions. Okay, so thanks everyone for staying with us till the end, right? As always, have a great day, right? Stay safe, trade safe, and we'll catch you guys again soon.